You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. And I'm pleased to be joined here for the first of many upcoming interviews from the STA 2018 conference. And my first guest is a newcomer to the program and indeed to the network. He is Sahak Manuelian. He is the managing director of equity trading over there at Wedbush Securities. Sahak, welcome to the Options Insider Radio program.
Thank you, and thanks for having me on this morning.
And Sahak, as we are wont to do with all of our first-timers here, why don't you go ahead and give us a little bit of an overview of your background in the space and how you found your way to Wedbush Securities. So
I've been at Wedbush for about 16 years now, and I've been doing this for almost 20 years. I've spent the majority of my career at Wedbush. I was 3 years at another firm, and then, for the past 16 years, I've been at Wedbush, working within the equities division and trading equities my entire life, several different sectors as I've been doing this, but really focusing in on our healthcare vertical over the last 9 years, I would say.
And a lot of our audience, I mean, the name is kind of explains a lot, but a lot of you guys have many different moving pieces, many different divisions over there at Wedbush, futures, obviously, equities. What is it you guys do, or securities, I should say? What is it you guys obviously focus on the securities vertical, but what is contained therein? What do you guys do there day to day?
Sure. Full service financial services firm. We've got obviously our equities business. We've got investment banking. We've got investment advisors throughout the U.S., offices throughout the U.S. And then we've recently added, as you mentioned, options and futures trading as well.
Now, do you interact a lot day to day with the options and futures arms of Wedbush there?
I don't. So my business is strictly within cash equities and trade equities alone. Our group and group of guys and gals are strictly within cash equities.
Now, I'm curious, we don't get a lot of people who focus on one asset here on the network. A lot of people have, by the nature of the beast these days, they have to trade multiple different things. What's the equities side of Wedbush? What's that like these days? You mentioned you focus on the healthcare sector. What are you seeing? Are you seeing a lot of increased flow in that space? Is it something where people are dialing back? Obviously, we've been in for a while now, this period where people might think we're a little top heavy in the marketplace. So what are you seeing anecdotally out there at Wedbush Securities these days?
Thanks for asking about the business. I think, first of all, I'd like to just highlight within our equities group, we cover 4 different sectors. So healthcare, consumer, tech, and then the financials. So these are the 4 different verticals that we're in. We have analysts in each one of these 4 verticals. And like I said, I actually specialize within healthcare and have been trading healthcare only for about 9 years now. As far as flows and so forth within healthcare and the type of action that we've seen in healthcare, certainly it's been very strong. Biotech's been very strong this year, which is kind of a continuation from 2017. I think the biggest difference between this year and last year really is this year has been much more of a stock selection, a stock pickers market, if you will, whereas last year, biotech in general moved higher together cumulatively. There were just all facets of small, mid, and large cap biotech, all of them moving higher. There's certainly been some landmines this year that can, have really hurt some different investors within stocks. But again, there's a lot of flows coming in. There's a lot of demand for new IPOs. There's been a lot of secondary paper, which I think speaks to the demand within investors' appetite for healthcare, specifically biotech. We've outdone last year's numbers of dollars, anyways, for follow-on offerings, and the IPO market. I think we're looking better than last year's offerings that came out as well. So there's a lot of investor appetite for biotech specifically, and the fact that there's a lot of other concerning issues geopolitically where biotech doesn't get rung up in, such as trade policy and so forth, where some of the multinationals and so forth may have been hit or lifted, and so depending on which time of the season.
Yeah, a little insulated from the trade war brouhaha.
Biotech certainly has been, and and aside from that, just the science has been improving for these companies, which is really the main driver of investment dollars to biotech.
We certainly like the biotechs here. They're always good drivers of unusual activity in the option space as well. Oh, someone bought 100,000 calls in a $3 biotech. What's going to happen? Oh, here comes the FDA the next day. But you mentioned it's kind of a bit of a stock pickers market. That's kind of interesting for us because we hear a lot of people, particularly in your neck of the woods, talking about the kind of just massive rush to passive investing over the last few years. How has that impacted what you guys are doing over there at Wedbush? And have you seen the same thing even in your vertical, the healthcare? Are people flocking to maybe, let's say, a more passive basket of healthcare stocks versus being very active in choosing, I want this name and that name and so forth?
Yeah, so I think if I look at last year, 2017, I think there was a lot more passive investment going on. And if I look at a year like this year, 2018, where if you look at some of the, benchmark indexes, whether it be the NBI index or BTK index, they're performing very well. So biotech's performing very well. However, passive it's no secret, passive investment garners more and more market share, and with really all of the ETFs coming to marketplace, it's certainly making it easier for individual investors to get into passive investment vehicles. But as far as biotech specifically, I would say it's tough to be a passive investor, especially if you are a passive investor within a lot of the small and mid cap stocks, which can be extremely volatile, especially around different reporting catalysts. So certainly a lot of passive investing still going on, but I think this year has been one where the markets are doing fine. Equities are up. Equities are strong. We're making new highs in the broader markets. that reduces volatility somewhat in the broader markets. But when you look at biotech, it's been a very volatile year, actually.
No, it's interesting you mentioned the ETFs as well. But first off, I'm glad to hear that you're still seeing some active stock selection going on. We certainly like the active hardcore here on the network. They keep us around, so we like those guys. But it's funny. I attended the Inside ETFs event for the first time earlier this year, and it was just amazing how many products there were on display. You name a subsection of something. If you want coconut oil ETF, if you want this, the keynote speaker was Quincy Jones launching a music ETF. So there are ETFs for literally every flavor, every stripe of investor under the sun. Some may argue that perhaps we've gone too far in that direction, but then maybe that's a conversation for another day. But I'm curious, are you a fan of this ever expanding, particularly in your vertical, the healthcare ETFs? So you think maybe it's time for people to really start getting a little bit more active, a little bit more, maybe not aggressive, but a little bit more involved with their selection these days?
We have more ETFs today than stocks. I don't think that's necessarily a good thing. What I will say is ETFs certainly have a purpose, right? ETFs certainly give both institutional investors as well as retail investors a way to hedge and put off risk in certain aspects of their portfolio. But the amount of ETFs that have come over the last several years, I don't know. I don't particularly see a reason for all the different ETFs. It's really been more of a me too, with all these different companies bringing out their own ETF for this, kind of like, to your point, within coconut oil or within cannabis now, or any small subsector of any different vertical, you can now buy an ETF. So, look, I don't think that's necessarily productive for individual investors to get hung up on. What I think is important is just the broader nature of ETFs, and that is a form of hedging, a form of getting access to certain basket of a sector or of a broader sector. And there's certainly, plenty of those ETFs out there. And, with more ETFs than stocks, I think it's the scales shifted to the other side. And I don't think that's in a good way.
Yeah, you do have to wonder if once the ETFs outpace the underlying securities that they're ostensibly listed on, that maybe the fulcrum is shifting in the wrong direction. So you won't be lining up to buy the Quincy Jones ETF when it launches.
Right, probably not. We'll take a look at it. But the fulcrum's certainly shifted. And then this leads to really liquidity questions, right? And poses liquidity threats, which is really of more concern to me when I'm looking at what's going on within ETFs and the amount of ETFs garnering investment dollars from investors. So, things can get ugly very quickly. And folks, have money invested within these different ETFs. Sometimes, I don't know if investors truly understand the risks associated with these ETFs.
Well, we certainly saw that in the volatility space earlier this year when a lot of people were in things like inverse volatility ETPs that they had no idea what would happen in a sell-off. So you're right, people are certainly migrating towards products that they don't understand. I'm glad you brought up liquidity, because we hear a lot of people in our network talking about the issues with liquidity and fragmentation in the option space. You guys have those issues and fragmentation tenfold in the equity space between the myriad different equity venues, and you have dark pools and everything else. So walk our audience a little bit through the issue. You get a call, maybe you get an order from a client for a fairly sizable chunk of stock. What's it like these days in 2018? How hard is it to go out and source that liquidity amongst the myriad fragmented venues you guys have to deal with these days?
Yeah, markets are about as fragmented as I can remember, and I've been doing this for about 20 years now. Again, the way I trade today is vastly different than I was trading 10 years ago, or even 5 years ago for that matter. And when I look at when I got into the business, it's truly a different world. But to try and answer your question, it's a great question, and it serves a big purpose for us, especially at Wedbush. Our focus at Wedbush Securities is really within the small and mid-cap space. So these are truly the more e-liquid type situations. And as a matter of fact, since we're talking about it, this whole tick pilot, which just ended as of the end of September, there was a tick pilot for 2 years for the really small and mid-cap space sector, which was a byproduct of the Jobs Act that Obama put into place years ago when he came into office. Look, there's so many different venues and exchanges where stocks trade. I think for us today at Wedbush, one of our biggest allies is, doing business with so many different firms across the spectrum. So small hedge funds, mid-tier hedge funds, long only, large mutual funds. The fact that we're able to do business with a broad variety of clientele really gives us access to or the opportunity to find the other side of a trade. And that's ultimately what we're trying to do. In fact, to have least amount of market impact when someone is trying to purchase or sell a large piece of stock. Outside of that, there's certainly different venues that we use. There's some venues that work better than others at different times of the day, or, everything is so situational, it depends. But having done this for quite some time and having the experience of what to try and use, which venue to use at different times or different stocks. I mean, stocks have inherent characteristics of their own. And when you're trading these day in and day out, one begins to get some feel for the different nature. But yeah, this has been market fragmentation has been something that we've been talking about here, certainly at the, within our STA for several years now, as it's become more and more fragmented.
You might actually like the fragmentation because, hey, it means people have to come to a guy like you, right, to navigate. But has it even gone beyond that point where it's getting harmful to the space at this point?
So, look, I think that's a tough question, really, to answer. Whether or not I like it doesn't matter. It's what we're doing to deal with it and what we're doing to stay with the times and to make sure that our business model is working with how things are trading today, and making sure that we have, at our fingertips, the right technology, and that we're able to access all the different venues. So the fact that we are, we're out there in the marketplace, we're able to interact, and I think one definite positive for someone like us at Wedbush Securities is the fact that we trade the small and mid-cap space. Our clients find value in the fact that they can come to us to try to find the other side of a trade. We're trading, 500 million market cap to 3 billion market cap on average. So if a stock's traded 200,000 shares a day, and that's the average volume that it trades a day, the fact that a client can come to us and say, look, I'm trying to purchase something in this stock, we can more often times than not find the other side of the trade. And that's what really, I think, helps our clients and, shows our value within a difficult market environment.
So what is it that brings you down here to STA? Is it the fragmentation issue? Is that what you're mainly here to discuss? Or what is top of mind for you guys in Wedbush here at STA this year?
Yeah, so I am president of STA Los Angeles, of our local Los Angeles chapter. So I'm out here, number one, because of that. I haven't been here in a couple years. I think I was here in 16 last. But when I'm able to come out here for our nationals event, I like to. This year specifically, look, there's several things that, and the top of mind continues to change, right, as the environment changes. But this year we've certainly been talking about tick pilot, right? And when we're in front of, we were at Capitol Hill earlier this morning talking to different Congress people. But tick pilot is one thing that we're talking about. And so running off of the tick pilot, which just came to an end as of September, we're now starting to talk about market access fees, right? And they're going to, trying to decide what type of a tick pilot they want to institute for market access fees. So we're talking about that consolidated audit trail, CAT, C-A-T. Again, a little boring. It's not going to excite anybody, but nonetheless important in different initiatives within CAT. That's another thing we're talking about over the next 3 days here. And then also something you'll find much more exciting probably is listed options, and the fact that they're trying to get more displayed liquidity and getting options more transparent as equities have become over time. So these are a few different things that are on the current agenda, if you will. But look, that changes and it continues to change and evolve. As far as me being here and with Wedbush, it's, seeing my competitors, talking to our vendors, engaging with competitors and trying to make sure really, when we come to Washington, D.C. and when we go to Capitol Hill and put our, focus in front of different Congress people, the main point for me anyways is, listen, laws, rules, and regulations are being passed. And if nothing else, and this was one point that I was making this morning to a congressperson we were speaking with, if nothing else, we want to make sure that the STA, which bear in mind, the STA is, individuals on the buy side, the sell side, vendors, software, so literally my competitors as well, but it's a group of industry professionals that have, I think, a good knowledge of how things work. And if nothing else, before rules and laws come into action, our voice needs to be heard. And I think that's what's so important about coming here once a year, every October, and going to Capitol Hill and just, if nothing else, just letting these different Congress people know what's going on in our industry, what we deem important in our industry, what laws they're considering, and trying to lay out some of the different ramifications and possible outcomes for some of these laws. So it's really just us making, our Congress people aware of our industry and what's going on within our industry.
We hear mixed things about the reception on Capitol Hill, sometimes more than others, some years more than others. What was the reception like at Capitol Hill today?
I have to say, I'm often, and again this morning, pleasantly surprised at how well versed some of these folks are that we speak to. Because, I don't know, if I sit back and think about all the different groups of people that must come to their office, so we sit down with these Congress people, and I'm always, maybe always is too much, but I'm more often than not pleasantly surprised as far as how well in tune they are with some of the points within our agenda. And some of them actually get somewhat granular and have some pretty deep knowledge of the different things that we're talking about. So, listen, they're always very cordial. They always take our meetings and always make the time to meet with us, which I think is huge. And I think, for the STA in general, this is an effort that needs to continue so that we can hopefully have, if there's new laws and new regulations that are coming in place, we have some say in what's going on. Or, even if we don't have some say in what happens, we're at least giving our viewpoint of how things actually do work within our industry and what may or may not be a good idea for, whatever it may be that's being considered. But, by and large, I'm pretty pleasantly surprised when I come down here, and go in front of some of these people and see how well-versed they are in some of these initiatives.
That is good to hear, because we hear a mixed thing. And you're right, some of the things you're coming down to talk about get pretty deep into the weeds pretty quickly. So
and some of the stuff, I'll admit, are pretty boring, like consolidated audit trail. It's not exciting stuff. However, it's important stuff within our industry. And again, it's impressive that some of these folks know quite a bit about this stuff.
Yeah, no one ran for Congress, right, to be a champion of the cat, and yet they have to learn about it and things. So it's good to hear that they're at least receptive to the conversation. Now, you mentioned the tick pilot a couple of times. That was obviously a big, very controversial issue in your space. So what were your views on it? Successful, not successful? What were your thoughts on the whole tick pilot?
Tick pilot, I would sum up as unsuccessful. I would also sum up as maybe went on much longer than I think it should have. It was in place for 2 years. That's a long time, and that's actually one thing that we're trying to get in front of legislatures now within the market access pilot that's being considered, is that we don't deem a 2-year pilot necessary, especially for market access. But having said that, back to Tick Pilot. Tick Pilot's very close to me because these are really the stocks that I'm trading day in and day out. We're not necessarily grinding our teeth on the large multi-billion-dollar multinational stocks, the large cap stocks. It's really small and mid cap stocks, which is our niche at Wedbush Securities. And having said that, a lot of our stocks fell under the Tick Pilot program, right? So day in and day out, we were certainly affected with the Tick Pilot. And I think, the empirical data that came out from the 2-year study certainly showed that it was unsuccessful and ultimately probably cost investors more money than, what the original hope was. So I'm actually pretty glad as of Monday we went back to no Tick Pilot.
At least they had a pilot period and it ended for yours. The penny pilot, quote unquote, in options has been ongoing for over a decade, and so it shows no signs of changing or no signs of having names removed that clearly don't benefit from penny liquidity. So at the very least, they were willing to have a finite pilot, which is what a pilot probably should be if you call something a pilot. This is an issue the option space is still wrestling a decade plus later with, and doesn't seem like it's going to have any successful conclusion anytime soon. So at the very least, yours has come to an end, which is good. So obviously there's a lot going on here at STA, a lot going on at Wedbush. You guys seem to be, every time I turn around, there's a new release from Wedbush, a new acquisition, a new division you guys are launching. So before we wrap up here, anything, maybe something we didn't get a chance to talk about here that's top of mind for you guys at Wedbush? Maybe you want to leave our audience with a little bit of a hint, a little bit of a tease of what's coming down the pike over there at Wedbush Securities. Now is the time, sir. The floor is yours.
Thank you, Mark. I would say that it's a great time to be at Wedbush. Our balance sheet is probably as strong as it's been in our history. There's a lot of different moving pieces, and yes, we've been fortunate enough to be in position to make some acquisitions over the years and continue to grow the business. As far as our equities business, the environment is as challenging as ever, but again, it's really focus and determination within a group of people that continue to drive the business within equities. And look, the surrounding is ever changing, and as long as we stay with what is happening in the marketplace and continue to help clients ultimately create alpha and make money, I think we'll be in a pretty good spot.
I lied. One last thing. I think I'm legally obligated to ask you about crypto. Everyone these days is obsessed with it in various capacities. I know Wedbush has many different moving pieces, many of which may interact with the crypto space. Could be the futures arm, maybe the securities arm. Are you guys at Wedbush Securities? Is this something you guys are dealing with? Is this something that your clients are obviously coming to you saying, we want to participate in these markets? What is going on at Wedbush, particularly at your arm when it comes to all things crypto?
Yeah, so I don't want to speak for other arms at Wedbush because they might have a different experience than myself. But for us within equities, I don't have my institutional clients asking to get involved in cryptos. Mark, I think that'll change, and I think that'll probably change sooner rather than later. But at this point, for our equities division, we just don't get much in terms of our client base, and our client base is, strictly institutional investors asking us about cryptos. We're not there, but I would imagine, look, we've been on the forefront of some other stuff like pre-IPO trading and so forth. So I wouldn't be surprised if we were to get into the crypto business at some point. But as far as the equities side, we're not there.
Well, Sahak, I'm glad we can get you on. Give us a little bit of the securities perspective. We don't always get that here on the network, so it's nice and refreshing. We'll look forward to seeing how some of these initiatives you mentioned play out at Wedbush in the coming months.
Thank you very much, Mark.
Great, thank you.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.